Good morning, good evening, good afternoon, whenever you are. This is another part of the Become the cTrader Master webinar. And today we are continue with the chart techniques, chart the types that we are going to use during analysis and trading using the cTrader. So today we will talk about the tick chart. So the first thing and one of the most important thing here is how to open the tick chart. So let's start with this: how to open the tick chart in the C Trader. So what do we have here is the euro dollar chart. As you can see, this is M1 chart, but we want to switch to different one. We want to switch to, let's say, we want to switch to 10 ticks chart. So we click here and we can straight on see the 10 ticks chart. Okay, so now we can zoom in, we can zoom out, not a problem. What else we can do? Let's say we want to have another way to access the tick chart. Where we go? We go here on these three dots, and with this menu we choose different tick chart. Let's say 15 ticks, and now the chart had been uploaded. So we can use it, of course, not only to the euro dollar, we can use it to the pound, we can use it to the some kind of a ETF as well. It doesn't actually matter. It works very nicely on every asset. Basic question you want to ask is, what are the tick charts? What's the difference between the tick chart and actually the candlestick, the most popular chart, which is the, let's say, candlestick chart? Basically, as you can see, this tick chart looks like a kind of a candlestick, right? But they are not candlesticks. Fundamental difference between the tick charts and traditional time-based charts, such as candlesticks or bar charts, is that in time-based charts, each candle or bar represents a fixed time period. Like, for example, as you can see here, 1 minute, no, 5 minutes, 3 minutes, 20 minutes, 1 hour, something like this. Okay, standard charts. Okay, in contrast, tick charts focus on the number of trades, which are called ticks, that occur regardless of time. So we can have 100 ticks a second, we can have 100 ticks a minute, we can have 100 ticks a day. All right? Each bar on a tick chart represents a specific quantity of trades. For example, if we are using 15 tick chart, each bar will form after 15 trades have occurred in the market. If we change it to 10 ticks, then each bar will form after 10 trades occurred in the market. And of course, it's being visible here on the chart. You can ask, what is the tick? Well, if you're having trouble to understand what tick is, basically you can define tick as the smallest unit of price movement in the forex market. Okay, so it represents a single trade, a single transaction, buy or sell, of course. Ticks measure market activity and, of course, the price changes. Every tick catch individual transaction, offering a granular view of the price movement and market dynamics. Right? So again, on a 100 tick chart, every 100 trades create a new one. On a 10 tick chart, every 10 trades creates a new bar, regardless of the time it takes. It can take 10 seconds, it can take 30 seconds, 1 minute, or less. Okay, so every bar on this USD to JPY, so American dollar to Japanese yen, the chart, which is set on the 10 ticks, means that on this chart, every 10 trades create a new bar, regardless of the time. Okay? So, what are the benefits of using this kind of a chart? Right? So, the first very important benefit is that they are filtering out noise. So tick charts can help filter out market noise as they only form new bars when a specific number of trades occur. No trade, no bar. This can eliminate erratic price movement seen on time-based charts. Okay. Now, what is the other advantage? Clearer market sentiment. Since each bar reflects on a consistent number of trades, tick charts can provide a clearer view of market sentiment and trends, making it easier to identify prevailing market forces. The other advantage of the tick charts, benefits of the tick charts, is that they can identify key price levels because tick charts are effective in identifying the key price levels, resistance, support, resistance zones, demand zones, supply zones, which are critical for traders to make informed decisions. Right? So let's just show this this benefits here. We got, for example, this horizontal line here, which is the resistance, the blue one on the chart, and right now we got, for example, this line. Let me say it will be white. Okay, white is support, blue is resistance. The red one is, of course, the current price, and it's very easy to see, to spot where this price, where this level is located. All right. So what else we can put on this chart? We can put trend line. So for example, we got this high here, we got this low here. Okay, I mean this second high here. Where's my trend line? I want to apply the trend line. Yes, trend line. Thank you very much. Yes. Now I will catch it. There you go. So that's the second one. What I'm trying to tell you is that there was a breakout of the trend line, of course. So that's the trend line, and we'll make it yellow. Okay, because it will be visible. Not a problem. All right. So we have a clear breakout above the trend line and then test, and up we go, obviously, because for some reason there is a push to the upside. Right, we can use Fibonacci without any problem. We can use the Fibonacci. If we go to the indicators menu, we can choose the Fibonacci retracement, for example. Right, so where's my Fibonacci's? Ichimoku, volatility, oscillators, trend. Okay, there is a Fibonacci level. There you go. So the Fibonacci's can be applied like this without any problem. So again, well, more and more bars is sorry, more and more lines and bars as well is getting right now on your screen. However, there is nothing wrong with applying them on the market. As you can see, we retrace 74% of this recent, let's say, two swing movement. Nevertheless, we can still, for example, do the external, let's say, projections of the last, let's say, last movement to the downside, and according to our analysis, we just hit 127% of this movement to the downside. Of course, we have explored these possibilities of the Fibonacci projections, extensions, retracements, and so on in our previous benefits, right? So that's about the analysis. How can you use in trading? What are the tick chart trading strategies? How can you use it, basically, right? So what you can do, obviously, you can do scalping with tick charts. Okay. Remember, scalping is a short-term trading strategy aimed at profiting from small, rapid price movements, and it involves executing numerous small trades throughout the day. Right. So why especially tick chart is good for scalping? Basically, scalping is very, it's almost ideal. Tick charts are almost ideal for scalping because of their ability to capture quick price movements, quick price changes. Because in tick based scalping, traders can identify and exploit micro trends that might not be visible on the time based charts. All right. Now, practical examples of scalping strategies using the tick charts. Basically, maybe you can target a specific tick count levels for entry and exit, or you can use the tick chart patterns for scalp setups. Okay, so what you can do basically is right now, we are using the 10 ticks as our main, let's say, main educational chart for everyone. So of course it's very good chart for scalpers, but you can go even lower. You can go to let's say 5 ticks, and you will see how dynamic this market moves when you're using the 5 ticks scalping. When you zoom out, you will notice that nothing changes here in our levels. They are absolutely the same. They must be the same because they are not time based. All right. And if you are into the wave, you can see clear impulsive wave to the upside, but that's the advanced charting techniques. Nevertheless, you can still use resistance, and still use support, white line. You can still use the, let's say, trend line breakout. This is or as well possible. And I'm just figuring out how to use as kind of a channel techniques as well with this chart. Nevertheless, it's possible, right? So basically, scalping is a very, very nice technique to use with tick charts. The other thing is you can day trade using tick charts. Remember, day trading is a strategy where traders open and close positions within the same trading day. They don't use any trades open overnight. So it requires capturing intraday trends, reversals, and breakouts opportunities, right? So the tick charts is very good for this kind of a strategy as well, because tick charts can provide more detailed view of intraday market movements. For example, the US dollar to Japanese yen. They can reveal critical information for spotting potential entry and exit points. In our situation, there is very nice technical resistance level, 149.06. We are approaching this level right now as we speak. And you can see that this kind of a levels, especially for day traders, are vital because there will either be breakout or there will be a reversal from these levels, like this one. Yeah, we got 149.02. So we broke above it, and as you can see, we never returned to it, and now we are going even higher and higher, and soon we will hit this level. We are only 1 pip away from this level here. We are 1 pip away because it's a five pip chart. Let me switch to, let's say, back to the 10 ticks. Okay, levels will still stay the same, and you can see right now. I will just show you day separators. Let me just show you day separators. Okay, so you can see viewing options, and I think I have the day separator off. There you go. I got the grid targets. Let deal map is not a period separators. Okay, on this kind of a chart, it's not possible. No, because it's still we are still not even covering the whole day. So maybe we should change our chart. Let me change to, let's say, I don't know, let's say 50 ticks. How about that? And now it's supposed to be even better. Can we zoom out a little bit? No, we can't. We can't. Nevertheless, this is still the beginning of the day. So maybe, just maybe, let me just go to, let's say that was 50 to 100 ticks. And yes, and we started with 27. So there is 27, and then there is somewhere here is the beginning of the new trading day, which is, there you go, somewhere here is the so we need like maybe we can do it on the okay, we don't need this line, sorry. Go back, and viewing options and the period separators. Okay, it's still not possible. Nevertheless, we can, for example, add some grid, and now it's even better because we can see, there you go, you can see 30th of the October, so the October starts here on that high. For example, so we can mark it without any problems using the vertical line. Yeah, where's the vertical line? There you go. So that's the beginning of the day. So you can even do some kind of trading using the daily when you are day trader. Yeah, you can use it this kind of let's say analysis if you don't want to leave the trades overnight. And of course, risk management. Another benefit of the trading using the tick charts. Let me just switch to the 10 ticks again. Um, General risk management is very, very important, especially in a fast-moving market. Okay, as you know, and the market like this, set to 10 ticks is definitely something that you want to keep an eye on. Disciplined risk management is crucial to preserve the capital, right? Of course, in risk management, you should um, size your positions based on your risk tolerance and the tick chart strategy you are using, scalping or day trading, for example, right? Smaller portions can reduce risk. Smaller orders, let's say I'm right now trying to one micro lot, okay, and if I want to sell it because of this level here, all right, is my trade open? I'm not quite sure. Okay, one micro lot, sell it. There you go, it's open now. And of course, I will try to keep my take profit very, very narrow if I want to trade like this. So just above this recent high. So I'm limiting my let's say my risk very, very, to few pips only, not even two, maybe, yeah, maybe 2 or 3 pips. And this is why I'm doing this, because managing risk during this very violent markets, trading during the violent markets, if you are a scalper or day trader, is crucial, right, to preserve the capital. So practical tips for tick chart analysis, if we talk about this. First thing is support and resistance. As you can see, we identified the resistance. Right now, I'm moving my stop loss to the. Can I move it to the? No, I just above this last tick high. There you go. Because there's a resistance, so any breakout above the resistance means that the market wants to go higher. So I don't want this trade anymore. This is crucial for making trading decisions, of course. So using supported resistance is very much welcome here, and it's very important in the general trading. Doesn't matter if you are a scalper or day trader, because those levels will act as a price tuning points and offer potential entry and exit points for traders. So as you can see, I've been using this technical resistance to open the sell order, just for educational purposes only, just for showing you guys that you can use it and you can do it on the tick chart. You can always use the tick chart for market sentiment analysis, because you can gauge the market sentiment analysis by observing tick data, like spikes in this volume, for example, or the spread of the candles, right, might indicate increased interest in a particular currency pair, right? So you can, of course, you can learn how to interpret these changes in tick volume and price movements to assess the market sentiment, right? So if there is a spike up supported by some kind of a high volume, of course you can use this kind of information for your in your decision, either you want to trade or not. As you can see right now, there is no trading right now on the market, so we just stopped. There you go, that's another trade for sale, right? So we're pushing lower. For example, right? Tick chart patterns, of course, you can use it for head and shoulders, you can use it for cup and a handle, you can use it for double top, double bottom, any basically the pattern that you are using on the candlesticks can be used on the tick chart as well. You can use trade channels, you can use trend lines, not a problem whatsoever. And if you learn how to recognize these patterns as they form on the tick charts by using some kind of visual aids, as you can see here, I got my lines on my chart in real time tick chart data. That might be beneficial for you as well to and help you to make a good decision. And of course, if you can incorporate tick chart patterns into your strategy, for example, like I just did with very simple trade using the resistance level, there you go. This is right now closed. Okay, so you can see that um, this the level doesn't actually might be strong enough to stop the bulls from attacking it, right? But nevertheless, you need to consider that there might be some kind of a potential reversal, which can prompt you as a trader to consider the next move. Okay, so I hope that this explained details will offer you a deeper understanding of the tick chart, especially if you are a beginner trader, and the tick chart trading strategies and the tick chart tips, and of course the risk management, making it easier for you to apply these concepts to their own trading activities. Use real-time examples from your trading if you want to make your trading even more interesting. Of course, you can the more, let's say, trading experience you have, the more screen time you have. Then of course, your trading techniques might get better. And the tick chart is one of this chart that can make your trading decisions, make your screen time more valuable for you, and overall beneficial for you, because it's obvious that the more experience you have, the better trader eventually you might become. So I hope you like this very short introduction to the tick chart. If you never use this one, uh, there is a solid bunch of reasons for you. I just gave, of course, during this webinar to you to start considering it. If not, please notice that you still have standard candlestick analysis possible, and standard candlestick charts possible. Of course, the tick chart, you got the Renko chart we spoke about last time, you got the bar range charts, which are here, and of course, Heikin Ashi charts for those of you who like this kind of a variation of the Japanese candlestick charts. Each of these charting techniques has his distinct advantages, and it's up to you which one you want to use. You, of course, can combine approaches and analysis techniques using a few of these charting techniques in order to incorporate them into your trading strategy and make your trading more profitable and beneficial for you. That's everything from me for today. Thank you very much for participating in this webinar, and I hope you will come back to me during the next webinar next Monday. So thank you very much for this meeting. Have a nice trading, of course, and see you guys next time. Take care and bye bye.